Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2024 question number 23. This is related to ratio calculation. Look here, what is the requirement? Requirement is which of the above actions would lead means guide to improve means increase the quick asset ratio of the business. Look here, which of the above actions, there are 4 actions there, above actions would guide to increase the quick asset ratio of the business. In that time we must identify what is the quick asset ratio formula. Quick asset ratio, look here, quick asset ratio, this is the formula. Quick asset ratio. How can we calculate quick assets there? Quick assets dividing current liabilities. You know what are the current liabilities? No, current liabilities. Okay, there is short-term liabilities. What is a quick asset? Quick assets are current assets, not all current assets. Current assets without means excluding, without closing stocks and closing prepayments. There's quick asset is the current asset without excluding closing stocks and closing prepayments. There is no didn't including in the quick asset. What is the didn't including? Didn't including closing stock, not including closing stocks and closing prepayment. Other current assets are included in quick asset, but these two guys not included in quick asset. Okay, all current assets excluding closing inventory and closing prepayments. Closing inventory and closing prepayments are not included in quick asset. Okay, let's see what is the question. Okay, look here, the quick asset ratio of the business as at 31st March 2024 was 1 to 1. There is a quick asset ratio is calculated 1 to 1. 1 to 1 means 1. This is the formula. This top of the 1 is quick assets. This is why quick asset is the top of the dial. Quick assets. This one is current liabilities. This is the already calculated quick asset ratio. Okay, let's see. They said the business is considering following actions. There are 4 actions there, actions to improve its quick asset ratio. Okay, we find the increasing action. Okay, increase the quick asset ratio. Okay, let's see. First one, to pay an insurance premium in advance. To pay, there is a payment, and insurance premium, insurance expense in advance. Look here, what is the double entry? before I write the double entry, I write some values to, I include some values to quick asset ratio. There is a current calculated. Look here, this is the 100 and this is the 100. The upward dial is quick assets. This dial is current liabilities. Okay, after that, this is the currently calculated quick asset ratio. This one cut it, answer is 1 to 1. Okay, this is the current situation of the quick asset ratio. After that, what is the newly transaction impacted? They said that, what is the first one? First one said that to pay insurance premium in advance. What is the double entry or impact to this assets or liability? Look here, I prepare double entry, cash credit 10, for an example 10, and debit to, this is a prepayment in advance. Look here, there is a payment in advance, premium in advance means prepayment. Okay, therefore I debit to insurance prepayment debit 10. This is the double entry. What is the impact to this one, this ratio? Look here, this one, cash credit 10. This is the cash credit, means cash minus cash deducting. Therefore this shorten cash deducting. What is the impact? This one or this one? Cash is there, quick assets. Why? Quick assets included current assets, excluding closing inventory and closing prepayment. Therefore current assets are there, cash is there, therefore there's a cash credit, therefore cash short is minus. Okay, the cash is not impact to current liabilities. Okay, look here, quick asset included current asset without closing in stocks and closing prepayment. Closing stocks and closing prepayments are not included, but other current assets are including. Therefore other current assets included cash, therefore cash credit I deducting from quick asset. Next one, insurance prepayment debit. Insurance prepayment is a current asset, no? Current assets. Okay, insurance prepayment is a current asset, not quick asset. Why? Insurance prepayment is a current asset, but we already want quick asset. Quick assets, they are not including closing into stocks and closing prepayments. Therefore quick asset not included prepayment. Therefore no impact to quick assets. Why? Prepayments are not there. Prepayments are not there. Prepayments are not in the quick. Therefore no impact of prepayment. Okay, prepayments are not included in quick asset, therefore no impact to this one. Therefore look here, what is the newly calculated ratio? This is the 90, this is the 100, divided, the new values are 0.9. The previously 1.1, but this is 0.9. This is the decrease in, we must find increasing point. Therefore this is the increasing action, but we find the this is decreasing action, but we find increasing actions. Therefore, this is not related to this one. Therefore, we can eliminate it. Okay. Next one. To sell existing inventory on credit. Okay. This is the inventory sales. I use this one. This is the current situation. Inventory sales. Okay, inventory sales. What is the impact to equation? I use assets equal equity plus liabilities. This is a credit sales now. Therefore, cost is 10, selling price is 30. Okay, credit sale cost is deducting from stocks. Sell to 30 is trade receivable. Next one, there is a gain 20, gross profit. There is a gross profit. This is the impact in that time we can find the answer to this one. Stocks means inventory. There is no inventory in quick asset. Inventory is asset no. There is a quick asset is calculating to this quick asset ratio. Quick asset is not included stocks. Therefore, we cannot get the stocks in it. Why? Stock is not there. There is no including in stocks. Therefore, we can eliminate the stocks impact. Therefore, gross profit is not impacted to this one. Trade receivable is an asset. There's a quick asset. Why? Quick assets not including trade receivable, cash control, petty cash, not including stocks and prepayment. Therefore, trade receivable is impact to quick asset. This is +1. Therefore, I add. This is no impact to current liabilities. Current liabilities is there, no? Therefore, we can find the answer. 130 dividing 100, 1.3 is increasing by previous 1. This is 1.3. There is increasing action. Therefore, we can get answer increase in action. B is the answer. Okay. Next one. To settle the existing short-term liabilities using the cash in hand. Okay, to settle the existing short-term liability, there is a payment for trade payable. Okay, to settle the existing short-term liability using in cash in hand, there is a cash payment. No. I use this equation. Equation. Look here, is a payment for current liabilities. No, current liabilities. Payment for trade payable. Okay, trade payable. Okay, cash payment. There's a 10 cash. Payment for current liabilities. Trade receivable. Trade payable. Look here, this is impact. Cash deducting. Cash is impact to quick asset. I minus this. This is the trade payable. Trade payable is current liability minus current liabilities is there, minus it. Look at the answer. This is 90 dividing in 90. Answer is 1:1. There is no change in this action. Therefore, we cannot get this action as answer. Why? No change in. Next one. To sell existing inventory for cash. There is a cash sales. look here, there is a cash sales, no? Cash sales, what is the impact? We cost of 10, we sell to selling price is 30 in cash, cost is deducting from, this is the inventory and stocks minus cash sales, therefore add to cash account and gross profit is there is a gross profit. This is the impact. At that time, inventory short, the stocks are not included, these assets. Why? Quick asset is not included stocks, therefore stocks we cannot identify as impact. Next one, cash is increasing, cash is included in quick asset, therefore I add this 30. There is no impact to current liabilities. Why? Current liabilities or liabilities, no impact, therefore this is the impact. 130 dividing 100, answer is 1.3 is increasing. Why? Previous one is 1, this time is 1.3. There is increase in point, there is increase in action. Therefore we can get the answer of D as increase in action. B and D is answer, B and D only, answer is 3. Answer is 3 for question number 23. Next one is 24, is a theory part. In that time we meet question number 24 in next video.